Well, good morning. We are wrapping up October, heading into November, and I want to share with you the latest data for our November market trends report. We're going to start with interest rates. We're going to look at some of the local data impacting the housing market here, but stick around. I'm going to share with you some charts at the end of this video that are going to show you how Austin compares to other markets in the country from 2007 through the Great Recession, through the last decade, through the pandemic to now, and where Austin still ranks in terms of total appreciation. So stick around for that. All right, so this video is being filmed on Monday, October 30th. This is a look at the 30-year fixed. We are just below 8%. So we're sitting around 7.88%. We were closer to 7.5% as we started October. So interest rates have just continued to climb. There's a lot of factors for that, but pay attention to what the Federal Reserve is going to say this week. Pay attention to some of the jobs reports that are coming out. But most importantly, it's the mortgage-backed securities investors and the bond market investors that are nervous about a number of factors. They're seeing too strong of an economy. They're seeing wars around the world. They want higher yield for the products that they're buying. The other thing to think about with mortgages is if you're buying a mortgage-backed security that's going to have a bunch of mortgages in it that are at 7 and 8%, well, how soon do you think those buyers are going to want to refinance if mortgage rates come down? Probably pretty fast. So in other words, your investment's not going to hold together very well. And that's why they want a higher return, because they don't think they're going to hold on to that as long as you would for those mortgage-backed securities that have investors at lower interest rates. Hope that didn't confuse you, but just know that that's one of the factors driving mortgage rates. All right, this is a look at our 5-year trends here in the Austin metro area. So this is through September. I'll move myself over here. So this is all of our MLS areas. What that simply means is we have a 5-county area. And so this is looking at a whole of the 5-county area. 2023 is the orange line here. These other 4 lines are the 4 years looking backwards. The big year was 2020 when we just had massive sales. The pandemic are these 2 lines through here. And then, of course, 2022, you can see it really drop off as the interest rates went up. The number of sales came down, and we are still trending down. Obviously, we're at the highest interest rate we've had in any of these 5 years right now, and we're seeing that in number of depressed sales. Sales volume is just the price of all the sales added together. And again, we're starting to see the total volume come down in terms of price. Median sales price. So where are we? We had pre-pandemic numbers down here. 2020, obviously the pandemic started here, and that year we never dropped in price in the fall. We just kept going up. We got to 2021 and spiked up in price. And then 2022, we spiked up in price again until interest rates rose. And then we had a huge fall last year. And that's what you see in this light blue line. This year, we've been kind of meandering sideways. We're actually still up just a hair over 2021. We are still up over this past February by about $20,000. In February, we were at $435 for a median sales price. Right now, we're at $452, so about $17,000. I do expect, with these high interest rates, with the market slowing down, and I'll show you a statistic here in a minute, just the lower number of sales, I do expect we're probably going to end up about where we were in February. I think maybe 430, something like that might be where we end the year on the median sales price. In other words, the year is kind of flat. Average sales price, we're seeing the same thing. The spike up, again, is just about dollar volume. I wouldn't read into that as much, but that median sales price, we're just kind of getting back to 2021 and hanging in there. Total listings, this has to do with inventory, and you can see we're still climbing. And I'll show you a chart that's a little more updated now that we're at the end of October. We're finally seeing that bell curve maybe start to roll over. It always does at the end of the year. You can see even last year when like nobody was buying at the end of the year, the prices were too high for many of the buyers. We still crested off at the end of the year in terms of total listings. But right now in the market, this chart's a little behind. We're sitting about 11,000 total single family sales. And of course, months of inventory, which has to do with how fast would the market sell out. If no more listings came on the market, we're probably over 4% total inventory in the market. This is Williamson County. I'm going to zoom through this real close. Median sales price for Williamson County. So for those not familiar, these are the northern cities in our metro. Williamson County is going to have Round Rock, Pflugerville, Georgetown, Leander, Hutto, lots of cities up there. It's hanging in there. Median sales price is kind of trending with 2021. I'll show you Hays County down here. This is Travis County, which is Austin proper. Again, we're probably a little bit above 2021, but again, I wouldn't read much into that. You can see it's just softening a little bit month over month. I'm going to go down to, let's see, Hays County, median sales price. Hays County had a bigger dip last fall, and it doesn't have as many sales often in that county, so sometimes the blips can be a little stronger. But ultimately, they're doing okay. They're hanging in there, again, kind of on par with 2021. And I think that gets us through that chart there. So this is Austin in real time. So this is the number of active versus sold listings. Let's see if I can zoom that in for you. And this is what I was talking about in terms of that bell curve. At the end of the year, we typically see listings come down a little bit. And here you can see they were climbing because the number of sales have been dropping. These are closed sales, the blue line. And you can see there's just fewer and fewer buyers with those higher interest rates buying right now. On top of seasonality, you typically have fewer buyers in the fall. So it's like a compounding effect. Higher interest rates in the fall, and it's just bringing down that number of sales. But we're finally maybe peaking over in terms of number of sales. This is as of this morning in the MLS. Where's October right now in terms of total sales? We're sitting at 1788. We haven't even had 1,800 single-family sales in October. If I go back to January, we had 1688. So we're just barely above January, which is typically a really slow month. So that's showing us number of sales in the market. This is a look at days on market. So you can see last winter and early in the year, January, February, man, nobody was buying. It was really took a long time to sell a house. Odds are these numbers are actually a little low, but this is the median. The median days on market, this was sitting around 53, was our peak in February of last year. And then, of course, the spring hits. You typically have more buyers come out. The interest rates were actually softening a little bit. And so that helped push sales a little faster. And of course, then we got to midsummer, which was our peak on price this year. And then the price slows down as the days on market go up. So we've seen days on market climb. As we get into October, right now we're sitting at over a month. But I would say typically for most listings, it's really about 2 months. And when you have 4 months of inventory, in reality, the average home could sit on the market 2 or 3 months before it gets an offer, unless you really just price it aggressively where a buyer is going to find that to be attractive. All right, so that's a look at the 5-year trends report. This is a look at some active data, but let's take a wider view. Let's look at Austin over the last 16 years compared to the US and other markets in the country. This is one of my favorite little websites. So this is the Federal Housing Finance Agency, and they track the top 100 metro area rankings. What they look at in this chart or in this list down here is they're looking at their appreciation or depreciation year over year and quarter over quarter. So pre-pandemic and during the pandemic, Austin, Round Rock, the metro area, was like number 1 or 2 on this list consistently every quarter, every year. Right here, bam, 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 just number one. So Austin was killing it. You had other towns with us like Boise and Nashville, and some of the Florida markets and Phoenix. And so all of them were just crushing it in terms of appreciation during that time. Now, as we look at it year over year, we're looking at October versus October. Camden, New Jersey's number 1. El Paso, Syracuse, Columbia, South Carolina, Miami's up there. Connecticut, South Carolina. These are not your typical names that you're used to hearing. A lot of these markets that didn't have a major run up during the pandemic, or maybe the pandemic negatively affected them. Now we're starting to see those markets crest. So where's Austin on this list? And remember, this is just a 1-year view. Austin's at the bottom, 99 out of 100. Over the last 12 months, Austin's down 11.8%. In the last quarter, down about 2%. San Francisco's at the bottom. They're 12.2% negative. They've gone up a little bit in the last quarter. They've had a little bit of a spike. Who's down at the bottom with us? Boise, Vegas, Phoenix, Seattle, Salt Lake City, Sacramento. These were the high flyers, a lot of them, during the pandemic. We've seen them have that run up. But again, this is a 1-year view. So let's take the wider view. This is one of my favorite charts to play with. Cumulative change since 2007. So the blue line is Austin, Texas. So if we go back to 2007, and that's when you bought the property, here's the Great Recession, and look at that. Austin was still in the green. Austin was still going up a little bit. Basically, it was flat. If you talk to agents that worked then, it wasn't an easy market. It was it was the recession like anywhere else, but the market didn't lose value. It kind of stayed flat. The bottom line is the United States. It went down to about 21% at the low. 2011 was the low, the end of the Great Recession in terms of housing values. And of course, then the US has been on a trend. It kind of came back to break even in 2016. And then right now, the United States is up about 78.2% since 2007. It hasn't gone double yet, but it's gone up, let's say, almost 80%. Austin is up 186%. And at the peak of the pandemic, it was up 224%. Just to put that in perspective, that's more than triple on the price of a property. So 200, double it, 400, triple it, 600, add another 25%, call it 650. So a $200,000 house in 2007 in Austin now costs 650 at the peak of the pandemic. This is interesting too. This is 2020, right at the beginning of the pandemic. Austin, 101% from 2007 means it had doubled in price. Okay, so a $200,000 house starting the pandemic was a $400,000 house. But look at this, 2020 Q2. By the time we get up to Q2 of 2022, 2 years, Austin went up 124% in 2 years. So that's insane. So if you want to know how crazy Austin was, and we weren't alone, but that's crazy appreciation. Buyers cannot keep up with that. Nothing can keep up with that. And when you throw cold water, which is the high interest rates and high property taxes, it's going to cool us off. We needed to cool off. We're still up 86% from the beginning of the pandemic. With our correction baked in, we're still up 86%. Okay, so that's Austin versus the US, but here's where it gets really fun. All right, let's look at Boise and compare. So now we're looking at Austin's blue, Boise is gray. Boise, at the bottom of the Great Recession, was down 44%. Wow, they got hit. Okay, Austin didn't. Now their lines mirror each other pretty well. They got to the pandemic, they went hot like us, they're having a correction like us. So Boise's up about 122%. We're up 186%. The big reason is Austin did not have a big fall during the last Great Recession. Let's look at Nashville. That was another hot market. Here's a look at Nashville. Looks a lot like us. Did not go down too bad in the last recession. They did go down about 11% at the bottom. But again, Austin was up. But look how much they mirror each other. You get to the pandemic, Austin, you can tell, was even hotter than Nashville, but Nashville was hot. They're sitting about 157% up over that 16-year span. But again, Austin's still up higher. Let's look at Camden, New Jersey, which right now is number one in terms of appreciation in the last 12 months. Wow. So here's Camden. They went down during the Great Recession, and they stayed down and stayed down and stayed down. And they just now, probably somewhere in 2020, got back to break even. And now they're up 40% cumulative since 2007. They're not even up 50% since 2007. And again, Austin's up such a huge amount. So what's happening is the markets that got super hot during the pandemic, and Austin was at the top of that list, they had to correct. They had such a run up. The high interest rates are having a stronger impact on those markets. And more importantly, also jobs. Austin is a heavy tech city now, more than it's ever been. Tech is having a slump. It's in a bit of a recession. Commercial real estate has been a really strong market here over the last 10, 12 years, building office towers and apartment complexes and all the things you have to build to keep up with this demand. Well, they're in a recession too. And so what's happening is it's got that cumulative factor where Austin is now, compared to the Great Recession last time, Austin's going to have a bit of a correction. And you've already seen it here in the slope. I think Austin is starting to kind of level out a little more, but it's going to have that gradual kind of adjustment until we see the turning of the page, whatever that looks like, whether it's interest rates coming back down, whether it's the economy stabilizing, or even just some good news in the market in terms of maybe the war in Ukraine or the war in Israel, those types of things, the war in Gaza, those things kind of slowing down or becoming more positive. So, as we head into November, let's say you're a seller right now, you've got to be conscious of all this data. You have high interest rates. We're coming into the slow season. And Austin, more than almost any other market, has had to have a little more of a correction because of how much equity was pumped into these properties. And so really, you just got to be aggressive on price. Like, your timing is tight. You're going to have some more inventory to compete against. And I would expect most of your buyers are going to ask you for some help, at least in terms of interest rates. So that's what we're seeing in the market with almost all our buyers. Is that's kind of the approach. If you're a buyer right now, you can't escape high interest rates. This is still what you're going to have to play with if you are borrowing money. So it's really important that you work with your lender up front, that you kind of understand what kind of opportunities you have in terms of rates, rate buy downs, rate buy down programs, how much that might need. If you're putting 10% down, can you ask the seller to chip in 3% of that purchase price to help you buy down that interest rate? We are using that strategy over and over and over again with our buyers, and it is having success because at the end of the day, the sellers do want to sell their properties. They're not giving them away, but they do want to find a solution that works for the buyer, but also helps them get their properties sold. It's a lot of data to go over as we head into November, but we've got, the market's still moving. We're still seeing sales. We're still seeing buyers out in the market, but those are the two things that are happening. So if you want to check out all our videos, please check out our YouTube channel at Ryan Kelly Group. You can see all of our videos there. You can go back in time and watch my weekly videos, and we'll be posting new videos every week, so don't forget to subscribe. If you are planning to buy or sell or invest in the market in the next 2 or 3 months, we'd love the opportunity to connect with you in person. I can go over this in more detail and kind of talk through a winning strategy for you. Until then, bundle up. Enjoy November. We've got Thanksgiving coming up, my favorite holiday, and we'll talk to you next week. Thanks.